Hello, and welcome back to Explain the Charts. Today, January 14th, 2025, we're diving deep into the USDCAD market. We will be examining the impact of recent news and current events on the price action of this currency pair. Recent news suggests a potential breakout in USDCAD, with key levels to watch being highlighted by several financial news sources. Rising oil prices are providing some support for the CAD, while the looming US PPI data could impact the USD. Some analysts predict a potential snap of a 4-month USD winning streak against the CAD. Let's turn our attention to the daily chart. We can see some notable price action in October, with a significant increase in price leading to a high in late October. Subsequently, there was a price correction, with a swing low observed in early November, followed by another price increase in mid-November. Looking at the recent candles on the one-day time frame, we see a trend of consolidation, followed by a sharp decline in price that seems to be driven by market sentiment. This might be connected to the U.S. sanctions on Russian oil, as we saw in the news earlier. However, the current consolidation suggests a period of uncertainty in the market. Switching over to the one-hour chart, we can further refine our observation on the recent consolidation phase. The candles on this time frame show smaller fluctuations that are not as dramatic as those observed on the daily chart. This smaller price action helps in detecting support and resistance levels with more precision. Now, let's zoom in on the 15-minute chart, where we have even more minute details to analyze. The high frequency of candles on this chart allows us to observe more fine-grained price fluctuations, especially in highly volatile moments. There was a sharp price decline on January 10th, as evidenced by the news and analysis we looked at before. The candlestick patterns observed on the different timeframes can be interpreted to signal short-term bearish or bullish sentiments. The longer-term trends, however, indicate a more complex picture, which may require further analysis and consideration of broader economic factors to interpret. Based on the chart analysis, we can identify several key price levels. The immediate support level is around 1.36, while the resistance level is around 1.38. A break above 1.38 could signal a bullish trend, while a break below 1.36 could indicate a bearish trend. These predictions are based on current market conditions and technical analysis. In the short term, there's a moderate likelihood of a breakout, either to the upside or the downside, considering the current market uncertainty and the potential impact of the US PPI data. For long-term prospects, there's more uncertainty. We need more information and time to formulate a confident long-term prediction. Things to watch out for include the US PPI data release, the overall market sentiment, and the movement of oil prices. These elements could significantly affect the price action. A positive surprise in the US PPI data might strengthen the USD, thus putting downward pressure on the USDCAD pair. In summary, while short-term movements are difficult to predict precisely, the confluence of news analysis and the observed chart patterns suggests that the immediate support and resistance levels play a crucial role in shaping short-term price action. Keep an eye on these levels and stay informed about the news and events that could affect USDCAD.